at the right time.
Good morning. You're watching Daybreak on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. The U.S. Federal Reserve raises interest rates on expected lines, defying market expectations, and a warning from President Donald Trump. The central bank, however, has trimmed its forecast for 2019 hikes to 2 from the earlier 3. It's a weak start to Asian trade after U.S. markets fell from the day's high following the Fed's decision. The government will announce a new recapitalization plan for PSU banks today. Bloomberg had reported last evening that close to 40,000 crore rupees would be infused in capital-starved banks. And the minutes of the previous Monetary Policy Committee indicate that members unanimously chose to pause on any rate action due to volatility in the previous inflation data. And finally, oil prices gained in overnight trade following Saudi Arabia's promise to extend production cuts in April. Let's talk about that U.S. session. Now, in the U.S., the Fed ignored falling equity markets and vociferous Donald Trump and raised rates for a fourth time. Equities across a range of sectors plunged thereafter. As you can see, the Dow fell about 350 points, the S&P 500 just above the 2,500 mark, and the Nasdaq falling 2.2% in trade. Sue Keenan of Bloomberg News has this report on what transpired in that session.
Some called it a stock revolt. Stocks fell across the board after the Fed's latest decision. Bonds rally, oil trimmed its gains, and the dollar slipped. The Fed, as expected, raised rates in December, but trimmed its forward rate hikes in 2019 from 3 to 2. The market was expecting a much more dovish move. They also decided to stay on path with their balance sheet reduction. Many believe that was a bit rigid and not adjusting to market conditions. Reaction was all over the board. One technical analyst said the stock market sell-off not good on a technical basis. That kind of lower low adds concern to the market. Others saw the rate hikes going forward into 2019 as a vote of confidence on the economy. Meanwhile, the stock drops that we saw were significant. Facebook down more than 7% as it was sued in Washington, D.C. for a security breach. FedEx down 12% after announcing a profit outlook cut because of trade concerns. After the bell, there was some positive news. Tilray, the marijuana stock, rising on an announcement of ABM InBev joining partnership to create some kind of feel-good drink they're going to research. Celanese, the producer of chemicals, is set to join the S&P 500 that normally makes index managers buy the stock. It replaces Express Scripts. Both those stocks were rallying after hours. In New York, Sue Keenan, Bloomberg News.
So Sue Keenan talking about the decline in stocks and other assets, a market revolt to the decision by the Fed. Let's talk a little bit more about the Fed decision. Sue mentioned that she thought, or rather the market thought, that it should have been more dovish. Here's a report by Kathleen Hayes that tells you more about what was expected and what actually transpired.
The Fed did make a big move today towards a less hawkish stance, but the problem was it did signal it's going to move more slowly next year. At least that's what it expects. Markets were geared up, something for a lot more dramatic. They raised their key rate for the fourth time this year, but next year the consensus is clustered more around 2 rate hikes. They had been clustered around 3. And you just mentioned the nod that Jay Powell gave to slower global growth, tighter financial conditions, stock market falling. I think it's very important. There are many things he said in his press conference that just seem to fall a little bit on deaf ears. A high degree of uncertainty on the rate path. That's what he sees. Let's listen to one very important thing he said later in the press conference.
We know that the economy may not be as kind to our forecasts next year as it was this year. History attests that unforeseen events as the year unfolds may buffet the economy and call for more than a slight change from the policy projections released today.
So again, plenty of hints towards the feeling of 2018 economy was kind to us. We could raise rates 4 times. Unclear what's going to happen next year.
All right, that's the view on the Fed. But let's go straight across to Bloomberg's Rosalind Chin, who's joining us live from the Hong Kong studios. Good morning, Rosalind. Everybody's still trying to understand what's come out from the Fed meeting yesterday. But there's also word from China with regard to action that will hopefully, or they hope, will bolster the economy. How are you seeing Asian markets this morning?
Well, Asian markets right now broadly trading lower, with the MSCI Asia Pacific Index trading down by 0.5%. Now, we have seen some action from Hong Kong, the Monetary Authority, saying it's hiking rates in line with the Fed. Hong Kong rates going up to 2.75%. Of course, Hong Kong dollar is pegged to the US dollar, so often they move in lockstep when it comes to these things. Hong Kong Monetary Authority did say, though, that it's up to commercial banks whether they are going to pass on that raise their own rates, as it were. But they also did say that trade and Brexit are uncertainties going into next year, just as those issues are, of course, global concerns as well. Now, in the rest of the region, we do see the Hang Seng actually down, trading just under a fifth of 1% lower. But the Shanghai Composite and the CSI 300 are just about flat, but inching into positive territory. If you look at Japan, though, and the Kospi, those are both trading lower as well. Samsung leading declines in Korea, in Japan, of course. Now the Fed has spoken. We're waiting for the BOJ. That decision will come out later Thursday, and Haruhiko Kuroda will be giving a briefing as well. When it comes to stocks, well, there's been a lower growth forecast for the year, of course, will probably lead to a lot more pain when it comes to that in Japan. We've got chip makers in Korea and Japan also pulling lower at this point in time. We've got SK Hynix down by 2%, Samsung down by about 0.1%, Tokyo Electronics down by more than 1%. And that's largely after Goldman Sachs advised investors, really, that there'll be more capital spending cuts with memory manufacturers, and that will probably result again in negative EPS revisions across the group. So that casting a bit of a cloud there for chip makers in the region. Back to you.
Thanks so much for that, Rosalind. Let's turn to India now, and Agam Vakil is here to tell you all about the day's trade and also to tell you what's happening in the futures and options space. Good morning, Agam. Well, the indications are that we are going to start weak today. What are you picking up?
Yes, Alex, but Indian markets have a way to buck the trend always. We certainly are likely to start off in the red, as the indications from the SGX Nifty future suggest. We are looking at a drop of around 80-90 points. But again, well, we have seen a loss of the 10,900 mark on the SGX Nifty. Let's wait and watch as to how this pans out for the Nifty. Speaking of which, we did see another 0.5% advance for the Nifty yesterday. The mid-cap and the small-cap indices outperforming the benchmark indices. Coming down to your Bank Nifty, that has also advanced 0.5%, but well, a lot of strength coming in the PSU sector. Of course, this is after a bunch of banks move out of the PCA framework, and that has led to the PSU banking index higher by around 3%. Moving on, well, the FMCG index was the other one which advanced by 1.3%. However, we have also seen a lot of traction in the Nifty IT index. No prizes for guessing why. This is essentially on the strengthening rupee against the US dollar. But let's take a look at your ADRs, and there is some weakness. Of course, this is largely on account of global cues. So Tata Motors, Vedanta, Dr. Reddy's, as well as ICICI Bank decline in trade. And among other ADRs, you also have some amount of gains in Wipro and HDFC Bank. But let's talk about institutions. And well, this time, after a handful of days, we've actually started to see FIIs buy in and dip into these Indian markets. They bought stock worth around 1,200 crores. And DIIs, on the other hand, have sold stock worth 481 crores on a net basis. Moving on, well, in terms of your contributors, we did see well, gains all round, actually. So while we did have substantial gains from HDFC, ITC, Axis Bank, and SBI, there was some amount of pressure in some of your, well, IT companies such as Infosys, TCS, and HCL Technologies, along with HDFC Bank. Let's move on and talk about your futures and options space then. And again, a very quiet day of trade for the Nifty futures for the third straight day in a row where we've seen less than 1% added in open interest. But the Nifty banking futures once again seeing more accumulation towards fresh longs. Can we expect some liquidation today? Let's wait and watch. But given the fact that we did see the Nifty advance, there was more writing around the 10,800, 900, 11,000 calls and writing around the 11,000 puts. So this is quite curious. But moving on, when it comes to your range, well, again, your range, at least as far as the lower end is concerned, it keeps toggling between the 10,800 and 10,500 level based on the put max OI. And on the higher end, it continues to remain with the 11,000 calls. So that's your upper end coming in. And in terms of your volatility index, that really didn't move too much. Your Nifty put call ratio as well, it did inch up just a tad bit higher to around 1.66, and your Nifty banking put call ratio has, well, it come off to a certain extent to around 1.36. Now, in terms of stocks, well, we continue to see the same old Adani Enterprises, Adani Power, Jet Airways in the F&O band, but among others, we have Chennai Petro, which has taken a little bit of a dip, and we've seen fresh shots coming through. Besides Chennai Petro, I'm also looking at something like a Cholamandalam Finance. Of course, do remember, it was a very good day of trade for the entire financial sector, and Cholamandalam was among one of them, an advance of around 5% with addition in open interest. And taking a look at Diwan Housing Finance, of course, as you can imagine, a bunch of housing finance names will also make my list. But this is where we've seen unwinding coming through because of so much volatility in the stock. Of course, the stock has advanced by around 6.3%. So, well, a handful of stocks out there, Alex, mixed cues coming in. Today, at least as far as the opening is concerned, could be a little bit of concern, but we're going to have to see, wait and watch as to how things develop eventually through the course of the day.
Absolutely. Thanks so much for that, Akam. Let's talk about the RBI, and in fact, the minutes of Urjit Patel's last Monetary Policy Committee meeting were released late last evening. And according to those minutes, the members noted that while the central bank's forecast showed a decline in the inflation print in the next 12 months, recent volatility in the inflation numbers had forced the committee to consider a wait-and-watch approach. Vishwanath Nair gives us the fine print of the MPC minutes in this report.
All 6 members of the Monetary Policy Committee, which met between December 3rd and December 5th for the last monetary policy announcement, had decided to announce a pause on the repo rate, which was set at 6.5%. However, all of these, of all of these members, only one, Ravindra Dholakia, has suggested that the MPC might take a shift on its stance from calibrated tightening back to neutral, so that there could be an option of a rate hike or a rate cut in the future. What Ravindra Dholakia pointed out was that in the recent RBI forecast of inflation, the inflation number had, the forecast inflation number had been brought down by about 120 basis points. This gave the MPC enough ammunition to consider a future rate cut, maybe not right away, but later on in time. What the remaining members of the MPC pointed out was that a recent drop in the food inflation number was highly volatile and therefore needed to be assessed further. Apart from this, of course, there are some upside risks to inflation which still persist, such as the staggered implementation of HRA by the centre and the states, the impact of minimum support price on food prices, a revision in the crude oil prices, a hike in the crude oil prices in the near future, or probably the uncertainty of it, as well as the chance of higher fiscal deficit by the centre as well as states, could all add to the inflation number, and therefore the MPC would need to wait and watch and then take an educated decision later on. However, the former Reserve Bank of India Governor Urjit Patel was quick to point out that if some of these upside risks do not play out, do not materialize in the way that they have been headlined, then the MPC could stand a chance for an appropriate decision, probably hinting at a rate cut in the near future.
All right. Well, that's positive news at least. Let's shift focus now to one of the aspects that's leading to that volatile inflation print, and that's commodities. I'm talking about crude, of course. Yash Upadhyay is joining with all the details. Good morning, Yash. What do you have for us this morning?
Morning, Alex. So crude oil prices, they share almost half of the day's gains on Wednesday after the U.S. Federal Reserve raised interest rates, raising concerns about the economic growth. Brent crude prices, they closed the day higher by about 1.7% on Wednesday after gaining well in excess of 3%, spurred by a government report that showed that demand for heating oil and similar fuels had hit a 15-year high. Most base metal names, they ended the day higher except for lead. So copper prices, they comfortably crossed the $6,000 per ton mark, ending the day higher by about 1%, snapping its 3-day losing streak, while zinc prices, they ended in the green as well, snapping their 5-day losing streak. On the other hand, gold prices, they fell for the first time in the last 3 trading sessions, falling as much as 0.5% as Fed Reserve raised interest rates amid and signals of more interest rate hikes higher than anticipated in 2019.
All right, thanks so much for that, Yash. Well, one of the big aspects of that conversation that Yash just took you through was the fact that crude oil prices have been very volatile. And one of the biggest talking points has been that Saudi Arabia it has been pushing for that production cut to be continued. Now, Saudi Energy Minister Khalid Al-Falih said that the current oil price is not linked to fundamentals, and what happened to the oil market was an account of political and macroeconomic conditions as well as speculative trading. Speaking to Bloomberg's Yosef Kamal Eldin at a press conference in Riyadh, he said, "Make no mistakes, oil market will achieve balance in 2019." Listen in.
With the oil market, we just have to wait and see how the financial investors react to various factors. I mean, what has happened, in my opinion, recently is a confluence of many non-oil fundamental issues, including the geopolitical issues, especially around the sanctions and the waivers that were granted by the United States. It also includes trade tension between the US and China and the fact that no resolution. It includes financial and monetary issues, including interest rates in the US and the strength of the dollar. But also recently includes a lot of speculative money that is exiting their position in oil for non-fundamental reasons. We know that there have been shocks in capital markets around the world and other financial issues that have shaken the financial markets, and the oil sector has taken a hit as a result of this. We don't overreact, as I mentioned numerous times, as the energy minister of Saudi Arabia and responsible for executing our policy. We remain focused on fundamentals. On fundamentals, I can tell you with a high degree of confidence that we will achieve balance between supply and demand in 2019. Make no mistake about it. We're united within the kingdom and we're united with our partners within OPEC and outside OPEC. Our objective is to bring supply and demand in balance and to react to the oversupply situation that surfaced the last few months. The decision we made in Vienna a couple of weeks ago, we believe is very balanced. We believe it's very measured. But we believe it's also very strong, and it will result in the end result of bringing supply-demand into balance and starting to draw down the inventory build that has taken place over the last few weeks.
All right, now today is a day of board meetings. A whole host of companies will be holding their board meetings today to consider various issues from dividends to buybacks to fundraising. Well, Somit Sarkar is here to tell you everything about those board meetings. Somit, let's start with the PSUs and what they're planning.
So among the PSUs, first one will be Coal India, where the board will be meeting to consider an interim dividend today. Now, as of 30th September 2018, the company had a cash balance in excess of around 39,000 crore rupees. And so far, the highest dividend amount per share that the company has declared is 29 rupees per share back in 2014. But this time, it could announce a higher dividend as the company did not have any major capital expenditure plans in financial year 2019. Now, the company has the option to utilize anything between 20,000 crore rupees to 35,000 crore rupees of its cash balance alone for this dividend announcement, now which means that the per share dividend could range anything between 32 rupees to 56 rupees per share. Now, such high dividend would result into a dividend yield of close to 13 to 22% on Coal India. Second will be ONGC, where the board will meet to consider buyback. Now, earlier the board had cancelled their dividend payments plan due to lack of funds and had said that they might consider a buyback post the third quarter of financial year 2019. But as of September, if you see now, the company had a cash balance of only 166 167 crore rupees, and it is likely to get close to 1500 crore rupees from Indian Oil Corporation's dividend and buyback. Now that would take the cash balance to close to 1700 crore rupees. So given the approximate cash amount that the company would have, the buyback amount and size is not expected to be large enough for ONGC. Thirdly, Container Corp. Now that company will be considering today bonus issue, and the bonus issue for Container Corp will be largely cheered by investors, as it could also help them save taxes post the issue.
All right. Now, that's plenty of action, obviously, to track over the course of the day with regard to the PSU summit. But there are also other companies holding their board meetings today, and an event, I understand, relating to Dr. Reddy's as well. Could you tell us more about that?
So I'll start off with Bharti Airtel, which will be considering a board meet today to consider various fundraising options. So let's see the possible options that Bharti Airtel has and they might take. The first option would be raising debt. Now that is unlikely to happen for Bharti Airtel, given the fact that they have more than 1 lakh crore rupees of debt on their books, and the leverage ratio is close to 3.7 times. Moreover, the international rating agency, that is Moody, has placed Airtel's current ratings on review for downgrade. So that is less likely to happen for Bharti Airtel. The second option that the company has is to sell stake in the DTH business. Now, last year it did sell around 15% stake in its DTH business to Warburg. So this option is open for them. Currently it owns nearly 80% stake in the DTH business, which is valued at close to 9,000 crore rupees. The third option that the company has is to sell stake in the tower arm, that is Bharti Infratel. Currently it holds close to 53.5% stake in the company, which is valued at close to 26,000 crore rupees. But this is less likely to happen now, as Infratel Indus merger is going on, and it would make more sense for the company to sell stake in this tower arm post the merger is completed. Now, fourth option that the company has is to sell further stake in their Africa business. Now, a few months back, it did sell its stake in Africa business, and the funds that were gathered were used to repay debt. Now, it is also planning an IPO for this, and it can consider selling further stake before the IPO. Currently, it holds close to 65% stake in the Africa business, which is valued at close to 21,000 crore rupees. The fifth option that the company has is to sell its fiber assets. Now, the company had earlier mentioned that they will be focusing more on the core business, so this option is open for the company. Now, we do not have an exact valuation of this fiber asset, but analysts don't believe it will fetch a higher valuation for the company. Lastly, it could also consider equity dilution. Now, company can look to dilute anything between 10 to 20% stake in the company through issue of fresh shares, which would fetch the company anything in the range of around 13,000 crore to 26,000 crore rupees. Rights issue is also an option for the company, which will also ensure that the promoter stake would remain at the same level. Now, one also needs to watch out for Dr. Reddy, because you see, today is the last day for Indigo to file an appeal against the Suboxone hearing, which was in favor of Dr. Reddy's. Now, currently, Dr. Reddy's cannot sell the product, and if Indigo fails to file an appeal against this today, then it can go ahead and sell the product going forward. But if Indigo files an appeal against this, then they cannot sell the product until the final hearing for this case comes on. Now, in the broader market, one also needs to watch out for Indian Energy Exchange, which will be considering its first ever buyback since listing. Now, as of September 30th, it had a cash balance of close to 400 crore rupees, which is higher than the company's net worth, which is close to 289 crore rupees. So the buyback amount and size in this case could be larger, as the 25% of the net worth is just amounting to 72 crore rupees. That is less than 1/5 of their total cash balance.
Hey, thanks for those updates, Somit. Lots of stocks already to watch out for. Nikki Mirchandani is here to tell you about the other stocks in news. Nikki, good morning. What are the stocks on your list today?
Hi Alex, I'm going to start off with Tata Motors, where Fitch Rating has said that the JLR restructuring may not be enough to lift the rating pressure and has revised downwards the rating to negative for the company from stable. Second in the list, we're looking at Jet Airways, where Financial Express and other newspapers suggest that the board is going to be meeting today to discuss fund rating options. So clearly one counter that we need to keep an eye out. Apart from that, we've seen NCLT approvals coming in from JSW Steel with regards to the resolution made towards the insolvent process for Vadman Industries. Apart from that, we're also looking at a merger approval, the composite scheme of arrangement approval of NCLT coming in for the arrangement between Birla Soft, which is the transfer company, KPIT Technologies, the demerger entity, and its subsidiary KPIT Engineering. Apart from that, a few pharma sector stocks are expected to be in focus, where Alembic Pharma on its notification suggested that it has received a zero observation under Form 483 from US FDA for an API facility back in Gujarat, and Wockhardt would suggested that the company is going to be meeting, the board is going to be meeting up on December 22nd for fundraising options. Apart from that, we're also looking at bunch of PSU banks. They're expected to be in focus. Government will announce any additional recapitalization plans for the bank today. Also, we're looking at an infra company, which is IRB Infra, which has suggested a Financial Express report has suggested that the company has bid for second TOT package.
All right, thanks so much for that, Nikki. Well, Flipkart Group CEO Kalyan Krishnamurthy has said that the company has forayed into private labels to make better quality products affordable. Talking to Bloomberg Quint's Nishant Sharma, Krishnamurthy said that new private labels verticals can be expected in 2019. Listen in.
See, we are already in more than 100 verticals, and actually the private label portfolio of Flipkart is very new. It's barely a couple of, I'm not even sure if it's a couple of years old, maybe less than a couple of years old. And in many verticals where we've launched private label, it forms anywhere from 7 to 15% of the vertical transaction share. We will continue building on this, and we will also launch new verticals as we get into 2019. We believe from a quality and affordability standpoint, Flipkart's private labels, Myntra's private labels, private brands have given a huge push to the customer, and we will actually continue doing that.
And is that a lot of focus going to go into building private label that also create your niche in the market? Is that the also mindset there?
Yeah, see, I'm not sure niche in the market, but if you just look at the value proposition itself, better quality products made affordable is why we launched private labels in the first place, and we continue to do that. In case of Myntra, the private brands they've built, hugely aspirational. It's they've become just through the private labels itself, they've just become such a desirable platform for the Indian youth. If you just ask the fashion-forward, fashion-conscious Indian youth or the young Indian customer, a lot of them are like, we want to get into the job market, start earning, and actually buy from Myntra. So we are very proud of what they've built so far, and we'll continue building on top of that.
Is partnering with omni-channel players, or more of brick-and-mortar players, is something which Flipkart is also looking at?
Absolutely. As far as we are compliant on that, as far as the law of the land allows that, we would look to partner with the Indian ecosystem on omnichannel. Maybe we will do some pilots in 2019. But as I said, as long as the law of the land allows us to do that, and as long as we are fully compliant.
And to add, are you looking for buying some stake in those brick and mortar, or the partnership route is the move?
See, partnership is the right frame. If there is an opportunity to invest in some capability, we will look into that as well. But we are heavily a partnership-driven company, and we will look to partner with people.
Well, it seems the season of loan waivers has just begun. Now, 2 days after being sworn in, the government of Rajasthan has waived off short-term crop loans from cooperative banks and loans worth up to 2 lakh rupees each taken by farmers from other banks. The move, which will cost the government about 18,000 crore rupees, is in line with the Congress Party's poll manifesto of waiving off farm loans within 10 days if voted into power. The waiver will apply to loans taken up to November 30th this year, according to Chief Minister Ashok Gehlot. Now, the Indian Space Research Organisation successfully launched the GSAT-7, a satellite from Sriharikota yesterday, meant exclusively for the Indian Air Force. It is an advanced military communications satellite developed in ISRO's Satellite Center. Take a look.
4, 3, 2, 1, 0. Solid motor propellers ignited and lift off.
Well, it got less fanfare than Tesla's launch, but it's certainly going to be more useful than sending a Tesla up to space. With that, that's all we have for you in this edition of Daybreak. Up next is All You Need to Know. Thanks so much for watching.